Hi, this is Michael Young with 2020 Employee Benefits here in Exeter, and today we are going to discuss health savings accounts. So there's a lot of confusion, obviously. We have FSAs, which are flexible spending accounts. We have HRAs, which are health reimbursement accounts. Then we have the HSA, which is the health savings account that we're going to talk about today. So let's talk about HSAs. They are a medical savings account that you have the ability to put funds away for future medical expenses. So when you have a health insurance plan either offered through your employer or that you purchase through Covered California or directly with Blue Shield Blue Cross Health Net, it has to be a HSA compatible plan. Now there are different rules that the IRS lays out and has to do with the deductible limits. But in general, when you have an HSA plan, it will say on your summary of benefits that it's HSA compatible. And that means you have the ability to open up a bank account and set aside money. So this is how it basically works. If you have a traditional plan, let's say it's a $1,500 deductible, you're going to pay this much money for that plan. If you purchase a bronze $5,000 deductible that's an HSA, instead of paying this much, you'll pay this much. What we do is we take the difference that we're saving and we put it in our pocket in the form of a bank account. And so you get to pay the insurance company less money, which is always great. So with the HSA funds, there are rules on how much you can put away per year. Now, a single person, I'm going to pull up the numbers actually right here. $3,650 would be the limit for an individual person for 2021. For a family, it's $7,300. Now, if you are over the age of 55 years old, you can do an additional $1,000, which is called a catch-up contribution. These are very similar actually to retirement plans. So like an IRA, that's kind of what the HSAs remind me of, is like an IRA. You're basically setting aside money, but for medical expenses. Excuse me. Now, one of the great things about the HSA is it opens up the doors to spend money on something where health insurance does not pay for. For example, if you get a massage, if you get acupuncture, even teeth whitening, there are some gray areas on what is considered a HSA eligible expense, but your health insurance will never pay for a massage. So this money can be used for that. It can also pay for braces for a child. It can pay for vision. It can even pay for travel to a hospital to put gas in your tank. So the HSA has a lot of flexibility. And the great thing about it too is you get to keep the money. If you do not use the money at the end of the year, unlike the FSA, the HSA, it's your money and it will roll over year to year. We have had clients come in here that have HSAs, and I have seen at the most about $30,000 in an HSA that was saved over 5 or 6 years. So it's a great vehicle to save money. Let's talk about taxes. This is the most important part in my opinion. When you put money in the HSA, let's say you're an individual and you do the $3,650, which is the limit for 2021, you do not pay federal income tax on that money. So if you are in, let's say, a 15% tax bracket, you save 15% taxes on $3,650, which is nothing to shake a stick at. That's a good amount of money to save. When you open up the bank account, you can choose to go through your local bank. Here in this area, Bank of Sierra would be a good option. Tulare County Federal Credit Union would be a good option. Let's say you want a bank that's online. HSA Bank, that's all they do, and they're really good at it. So you would be able to set up the bank account. You would have a Visa card that you would swipe when you use the doctor's office, or you pay for vision, whatever it may be. A lot of these banks also have the capability to go online. HSA Bank in particular, you can actually make payments through the bill payer to your vendor. And another thing about HSAs, which is really great with the health insurance in particular, oftentimes they bill you later. So you have 2 weeks to pay your bill. Now, if you have a copay on your medical plan, like a traditional plan, you're going to pay up front for that service. The medical plan that's an HSA plan with the high deductible, you do not. You typically get billed later. So you have time to put the money in the HSA account. Just another feature that this comes up as a question. How do I fund it? Well, you can fund it all at once, the entire $3,650 as an individual. You can do it on a monthly basis. You can also wait until you need to fund it. So you have a doctor visit, you have a few weeks until the bill comes. Let's go ahead and move $120 into that account to make that payment. So that's the general, that's generally how the HSAs work. I hope I answered a lot of your questions. If you have more questions, please email me, Mike, at 2020employeebenefits.com. That's Mike at 2020employeebenefits.com, or give us a call, 559-592-3495. Have a wonderful day, and we'll talk to you soon.